What's up, everybody? This is Sunko, the Korean bro. Today is 2023, May 18. And let's see what we have, okay? Okay, what do we have tonight? Elon Musk predicts Tesla's AI ChatGPT moment is coming soon. Is the stock a buy? Google ups the ante in the race for AI dominance with two new products. Here's what investors should know. Here's how Moderna turned a profit in quarter first. Prediction to growth stocks. What I'm gonna do is I'm just gonna go through every articles and then read pretty much all of it and then try to get some knowledge uh, by reading it. Okay. 87 billion reasons to buy Apple stocks heading over fish right now. Why is everyone talking about Palantir stock? Okay, first, Elon Musk predicts Tesla's AI ChatGPT moment is coming soon. You stock a buy. Musk believes Tesla is far and away the leader in AI. He thinks it could possibly triple the company's recent profit margins. Investors need to be cautious as robotaxi promises have been made before. Okay. Elon Musk thinks Tesla's self-driving capabilities will grab investors' attention. Self-driving capabilities, okay. Musk hosted Tesla's annual shareholder meeting on Tuesday and did a live television interview after the meeting. During that interview, the dynamic CEO gave investors his vision of something that he thinks could catapult Tesla shares higher. Whether he's overly optimistic or not, investors should be paying attention. Okay, Musk said he doesn't think investors see what Tesla's extensive artificial intelligence technology could do for the company. But he believes it will be this year or next when the company and the stock will get credit when Tesla has its ChatGPT moment that can significantly boost its results. Musk believes Tesla is the true leader in AI, adding, I'm not sure who is second, frankly. OpenAI's chatbot vaulted AI uses into the public's view late last year, and Musk sees a similar recognition of Tesla's use case. He told CNBC's David Faber, I think Tesla will have sort of Chat GPT moment, maybe if not this year. I'd say no later than next year. There is a time frame he sees for a truly autonomous driving platform rolling out to Tesla vehicles. When that technology is ready, Musk said 73 million cars will be able to drive themselves when no one, and then 5 million car, and then 10 million cars, and that could be extremely profitable for Tesla in several ways. Musk's vision is that the technology will allow Tesla owners to transform the utility and value of their vehicles. For example, Tesla that would previously be parked most of the day could generate revenue as a driver-free taxi. That revenue will be shared by the owner and Tesla. In his view, that would mean instead of effectively having, say, 25% margins, it might be 70% or more. And I mean the free cash flow associated with that is actually truly a staggering amount. Okay. Caution is prudent. But Musk has been promising the rollout of Tesla robotaxis for many years now, so investors have reason to be skeptical, yet he seems to be focusing more of his time in that area now. Musk named a new CEO for Twitter this week, allowing him to concentrate more on the automaker. He said, I'm going to be devoting a lot more time to Tesla and especially on the AI development and new product development. So people are pretty much skeptical on what he's doing. Um, Google obviously entered the race for AI dominance with two new products. Here's what investors should know. Making a difference in healthcare, okay? These two elements can make an enormous difference for biotech and pharma companies. Okay. Okay, Google parent company Alphabet is no stranger to artificial intelligence. The technology giant made a focus years ago, using AI to improve everything from its searches to its offerings to potential advertisers. And just last week, Alphabet wowed investors with its latest AI updates at its annual developer conference. But the company didn't stop there. In fact, Alphabet's announcement at another conference yesterday may signal a major step in a $1 billion high growth part of the AI market. I'm talking about healthcare AI. Alphabet's Google Cloud announced two new solutions that could be game changers for biotech and pharmaceutical companies. Here's what investors need to know. Google Cloud said its target and lead identification suite and the multi-omics suite now are both available worldwide. The first product help scientists predict potential structure. This is the key to drug discovery. Once researchers understand a particular protein structure, they can understand its role in disease, and it makes it easier to develop treatment targeting this protein. And it goes on and on and on, making a difference in healthcare. What does this mean for Alphabet? The company has made a bet on AI across its business, and these new developments in healthcare AI could be one of Alphabet's most significant AI steps yet. While growth in Google's advertising revenue has slowed, revenue is on the rise at Google Cloud. The business revenue advanced to 28% in the most recent quarter. Amazon's Amazon Web Services still remains the market leader by far, but a focus on healthcare AI might be the element to power Google Cloud's growth moving forward. AWS recently said clients have reigned in expanding the current market environment. But as we look at Google Cloud's new AI platforms, we could imagine healthcare clients possibly increasing their spending. They need to develop new products to grow. And if AI can help them get there faster and cheaper, it's a worthwhile investment. So it's not. Um, so AI Google is doing something that gets dominance in some other areas other than the areas that they've been up to. It's something new. Hmm. And next one, Tesla, Alphabet. It's all about Alphabet and Tesla. Okay. How the Moderna aims Chewy recently reported record revenue and profit. Ah, this is 속살 맛집. Yes, it is indeed. Uh, if you keep watching it till the end, I'm gonna take off my clothes uh, slowly. Every 10 minutes, one layer uh, will be gone, and the other layer underneath this uh, will be gone away too. Yes, exactly. I'm going to take off my clothes over and over. Yes, this is a 속살 맛집. Yes. Only yes. Only the people who are qualified can come inside this YouTube live, and only those people who are really special can come here and look at me taking off my clothes, okay? And that's you because you're so special. You have every rights, you have every privilege to watch me taking off clothes, okay? I know you're working, but uh, regardless of the fact that you work or not, you know, you got every right to watch me. Yes. Ah. Hey. I am lion. Okay. I got to pull myself together. This is a stock trading YouTube. This is not some kind of chip shit, you know, take off YouTube live. I got to pull myself together. This is very, very serious stock trading news live show. Okay, 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 okay. Oh, but if you watch it till the end, I'm 100% positive that you can see some naked guy dancing vigorously, dancing so well. I mean, you don't want to miss it, okay? All right, but naked guy, yes, that's what I'm talking about. Naked guy at the end of this, YouTube live. Because, if I just show you uh, me getting naked, it's not fun. Because I've got to have some kind of system to make you watch it till the end, right? So I cannot just show you my naked body right now. I got to do something. Oh, okay? All right. But meanwhile, for 20 minutes or so, I'll be talking about stock. Okay, so uh, so the think of it as a reward thingy. Okay, oh. Naked guy. Yes, yes, naked guy. Okay, Uni, what I've been talking about. Okay, okay, good, awesome. Okay, what I've been talking about is growth stocks that a lot of people look for. And the article that I was reading is written by the guy named Adria Clemino. I think this guy is from Spain or somewhere. And he says three magnificent growth stocks that he think a lot of investors should pay attention to. And Amazon, no doubt. Moderna, as you may have know, Madonna is listed here, and Chewy. Chewy is the one that I paid attention to last time, but it's been keep going down recently. Uh, Let me read some article related to it. I myself also invested into it, but then I'm just keep holding it, and I'll probably hold on to it till I really see the result. Let's see. See, Chewy, an online seller of pet supplies, announced record revenue, profit, and free cash flow in its full year 2022 earnings report. In spite of today's difficult environment, pet owners still are spending on their furry friends. But Chewy doesn't sell just pet supplies. The company also offers online vet visits as well as pet insurance. Shoppers can turn to Chewy for pretty much all of their pet needs, and considering the total US pet market is worth about $130 billion, there's still plenty of room for the company to grow. Chewy has an excellent track record. It's more than tripled revenue over the past 4 years to surpass $10 billion, and over that time period, it's expanded its gross margin to 28% from 20%. Hmm. Okay, let's look at price of Chewy. All-time high is above $100, and now it's somewhere underneath $40. Okay, Chewy's share price doesn't reflect the company's growth. The stock has dropped 9% this year after falling nearly 40% last year. Right now, the stock trade is 67 times forward earnings estimate, down from 120 just a few months ago. The company still is in the early stages of its growing story, so there's plenty of room for earnings and share price gains down the road. That makes it a great addition to your Make Me a Millionaire portfolio. Let's actually go to Yahoo Finance and look at this chart and see what this chart says. Chewy. Okay. Okay. Okay, I get that. I get that its revenue has been growing over the past couple of years. Since 2020, it's been growing over and over. Hmm. And stock price doesn't reflect that point. Okay, I get it. Hmm. Huh. Chewy. Let's look at more of the articles about Chewy. Record revenue. Chewy. Okay. The chart that I'm looking at, well, it's exactly not chart, but I'm looking at income statement. Let's see. Since 2020, its total revenue has been growing, and also let's look at gross profit. And its gross profit is really huge. Um, in the early 2020, it was about 100 14,000. Well, I don't know how to um well, let's see, 283. Its operating expense has also been growing. Operating income has also been growing, but then its gross profit is huge. Okay. Mhm. Mhm. Okay. Balance sheet, total assets. Mhm. Cash flow, operating free cash flow. Uh, hmm, pretty good. Okay. Hmm. Okay. I'd have to look at YouTube, hmm, or I'd have to see what other people say about Chewy, and after watching it, I'll go over factors about why I have to buy Chewy. Okay. And next one, we have a tech stocks. Tech stocks are doing something not seen in 97 years. Chewy. Following a rough year, mega cap tech stocks are leading the major indexes higher in 2023. Tech stocks are outperforming the S&P 500 to a degree that's never been seen. Okay. Hmm. History suggests sector rotation may be on deck. Okay. This may not bode well for Wall Street. And investors likely realized last year putting your money to work on Wall Street can be an advantage, at least in their short run in 2022. The ageless Dow Jones Industrial Average benchmark S&P 500 and growth-dependent Nasdaq Composite were all entrenched in the bear market, with the Nasdaq taking the brunt of the pain. But 2023 has been a different story thus far, whereas the Dow is relatively unchanged for the year as of the past weekend. The Nasdaq Composite has rocketed higher by 17%. This outperformance is being led by brand name mega cap companies, predominantly found in the tech sector. Ha 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 ha. Ha 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 ha. Hmm. Okay, it's not really interesting article. Let's go over to one that I've paid attention to these days. Let's look at the chart of PayPal because I myself also am really interested in PayPal, and like it's been going down recently if you look at stock market carefully, but its profit has been going up sadly, and so I wonder how other people will think of it. Stock still up by PayPal. Hmm. Why? Uh, Okay, let's look at this one. Total payment volume is astounding. For all of 2021, PayPal processed $1.25 trillion dollars in total payment volume, making the first time in the company's history that it eclipsed the 413 figure milestone. This was up 33% from the prior year, a clear indication of the strength of PayPal's network. For 2022, the leadership team forecast TPV of $1.5 trillion. This is an gargantuan amount, and it underscores just how important the business has become in digital payments and e-commerce. Venmo, the company's popular personal finance app, grew TPV 44% in 2021 to $230 billion. We're still at the beginning of our monetization journey with Amazon, implementing the option to pay with Venmo later this year. Chief Executive Officer Dan Schulman said on the quarter four earnings call. Adding capabilities like buying and selling cryptocurrencies, tracking cash and business profiles to Venmo certainly also support growing TPV in the years ahead. So what he says in this article is that total payment volume is astounding. Um, and it's not only themselves working for this uh, volume, they are having some partnership with the company named Venmo. Venmo. I guess it's personal finance app or something, and they are having partnership with Venmo, and um, its merged version is likely being used inside Amazon or somewhere. So they're expecting more of a payment volume. Uh, well, that's what I can get from reading this article. And let's look at second reason. Engagement is rising. Another impressive metric from PayPal's latest financial release was that the average account conducted 45.4 transactions over the trailing 12-month period. The business now has 426 million uh, active accounts, of which 34 million are merchants. New features is in the flagship PayPal app that were introduced last year, like bill payment, early direct deposit, and shopping rewards and deals. Help the company makes progress in becoming a complete financial services app for users. Okay. Mm. Bill payments, early direct deposit, shopping reward and deals. But management will now focus on sustainable high quality growth to drive engagement, increase revenue uh, per active account. I fully expect transactions per account to continue marching higher as business lets its least engaged customers roll off. We're seeing double the average revenue per active account when somebody uses our app versus just checkout. Schumann said, when somebody uses the app, their propensity to churn is 25% less. He continues. So the name of the game is to attract more valuable customers and get them using multiple services. Hmm. So what this says is that previously I talked about total payment volume. Uh, and now this is more of an like engagement and what services people use. Um, so for example, uh, as a service user myself, I also use a PayPal, and if I become active user of PayPal, then I will try to look for services that they provide, right? Uh, Probably digital transaction is not the only service they provide. They probably offer more of services that I don't know, right? And it's likely that they're still like working on making new service so that people be satisfied with what they provide, right? And it seems that just last year, they were working on drive engagement with what is it? Bill payment, early direct deposit, and shopping rewards, and so on. Okay. And the last reason, cash machine. With a stock that is just crashed as much as PayPal did, it's easy to forget how astounding the company's financial situation is. This is a capital light business model that has proven to be a very lucrative cash machine. PayPal generated $5.4 billion of free cash flow in 2021. Put another way, for every $1 in revenue the company brought in last year, a little more than $0.21 turned into cash. This financial flexibility gives PayPal the ability to continue pursuing strategic initiatives like the $2.7 billion acquisition of Payday, a Japanese buy now pay later fintech. The company also has the wherewithal to introduce new features and updates to bolster its competitive position in the crowded digital payments market. Okay. With more management has the means return capital to shareholders in the form of stock buybacks. Hmm. So for that three reasons, he thinks that investors should buy. So yeah, and there's no doubt that this is a cash machine because PayPal mainly deals with money, right? Hmm. Let's look at some other ones. Mounting competition. People are pretty much positive in terms of buying this one. Mm, cheapest valuation ever. The company's revenue is at all-time high. That's the most important thing. See, its stock price is very, very low. It's like now it's reaching like all-time low, but like its revenue is an all-time high. there's certainly a huge gap in between, right? Management is using most of its cash flow to reward shareholders. It needs a new CEO who can take PayPal into the future, a tall task with an uncertain outcome. Okay. In 2022, PayPal generated record annual revenue of $27.5 billion, which included record revenue of $7.4 billion in the fourth quarter. These numbers were up 8%, 7% respectively from their comparable prior year periods. But the stock catered because profitability took a big step back. For example, earnings per share in 2022 were down 41% year over year to $2.09. Pandemic fueled growth motivated management to optimistically chase a lot of opportunities that ultimately hurt its bottom line. But now the team is reversing course. Management previously found ways to save $1.3 billion in 2023 and has since found $600 million more in savings. That means profitability is expected to improve in the coming year, which should be good for stock. Stock trading near its cheapest prices ever. Its price sales ratio is about 3, and its price to FCF ratio is about 17. Okay, here there's only one doubt. When as a investor could possibly have its slowing growth and leadership changes place legitimate question marks on the business. So I think at least at this point, this author writer thinks its slowing growth could be problematic, and that leadership changes could be cumbersome. Uh, but at the end, he says, personally, I believe stock to buy is one that I continue to hold in my own portfolio. It's far from a no-brainer buy today. Yeah, but at the end, he says you should buy it. Okay. I might have to put an end to YouTube live tonight. Thanks for watching. Finally, it's a time. Uni, I'm not sure if you're still watching it, or are you just put your cell phone side and anyway, because you're still here, I'm going to show you something special. Okay. Thanks for watching, and I'll have to talk to you secretly. Okay, it's since uh it's being broadcasted worldwide. I know nobody's watching, and it's only you who's watching it. But then gotta have to keep my privacy, right? So I'll send you my personal video. Okay. Anyway, thanks for watching. I'm not sure if you're still here or not. Anyway, thank you, Uni. Bye bye, Uni. I think you're working at night right now. Bye bye.